Yeah, it's been a while since we shot an episode together, Nick. Yeah, why don't we start off, your current global take on the economy as it relates to the financial markets as well as geopolitics.
I think the markets right now, and just as a disclaimer, nothing I say here is investment advice. Please do your own research or hire an advisor. When it comes to my take on the markets, I think you're just not getting compensated to take excess risk. I don't think it's the end of the world tomorrow necessarily, and it's the best short selling opportunity of all time. But for right now, I look at what the valuations are, particularly in US stocks, compared to other parts of the world and just on an absolute basis, and what earnings expectations are kind of implied and what macro headwinds versus tailwinds they are. And it just doesn't seem like a good time to take risk. Like equity risk premiums are flat to even negative, depending on what metric you look at. And you have the market heavily concentrated in a few tech stocks, which makes the S&P a little bit fraught, in my opinion. And then on top of that, a lot of the bullish catalysts that have been driving this rally post the tariffs are kind of played themselves out. Like we've gotten all the good news on the trade deals. The economy has been resilient, but there are some weakening, concerning signs we will get into later. And so it's just with an economy that looks like it's slowing down and valuations that are priced for more good times to continue, and the valuations, particularly the concentration in the AI sector, are concerning. I don't feel like I'm getting compensated to take risk. I think the opportunities are more in the international space and in the bond market.
What are your thoughts on Latin America and other parts of the world, perhaps Asia, as it relates to opportunities?
Well, Asia, I think it's the emerging markets and even developed markets to a lesser extent. Every country has different fundamentals, especially true with EM. Like I want to look for places whose countries have relatively poor governance, but are turning it around the right direction, or there are political signs that things will start going a different direction. Like, whereas other like countries that already have done everything right, relatively speaking, like the U.S., that's why it's limited opportunity. Because what are you going to do? Bring an even more pro-business president the next cycle, just given the way our politics shake up. But there are places, opportunities like Argentina is a place that looks interesting to me. Chile looks interesting to me because they're having a new election. It looks like they're going to put their own version of Malay in that country. I think that Brazil and Colombia are probably trending in the other direction and probably would stay away right now from Mexico. Also has some governance issues with their recent judicial elections. So I think long term, the fundamentals for Mexico are probably stronger than a lot of other places. But in the short to medium term, I'm a little bit concerned because of its dependence on the U.S. economy. And if the U.S. sneezes, Mexico is going to catch a fever. And then also just the decaying governance in the country, which is concerned from a security perspective and from a political perspective. And then in Europe, I think there's a lot of opportunities right now. Europe has been mismanaged for a decade. The EU, as GDP per capita was about the same as the US in 2007. Now it's almost double the US GDP than the EU. And if you look at leading countries like the historically like the vanguards of Europe, they're the ones that have been struggling the most. The UK, like their GDP per capita is on pace to fall behind Poland right now. They've been mismanaged for a decade due to bad economic policies and not capitalizing on Brexit like they could have. And then you have France. Macron has tried to do structural reforms to deal with the retirement issue and the structural problems with the labor market, but every time he tries to do something, it gets blocked by very strong opposition that prevents any sort of meaningful reform. And then Germany, their problem really is that they've decided that they want to be this major industrial manufacturer, but then they give themselves the highest electricity costs in Europe due to their energy policy. You have to look at other corners of Europe. Switzerland has a lot of potential. I think Spain has a lot of potential because they can become like the Florida for Europe that attracts retirees from the rest of the continent. Portugal, if they is a similar dynamic, but it doesn't have as much major companies like Spain or international multinational presence, and also has the worst governance trajectory. Scandinavian countries have some potential too, and then a lot of the former Eastern Bloc, Central European countries like Poland and Czechia, I'm pretty bullish on. So it depends where, honestly. And then places like South Africa and Turkey, not a big fan. Asia, it depends what kind of risk you have. If you think there's no risk of Trump cutting China out of the global capital markets, like what happened with Russia during the Ukraine war, China is a great opportunity right now. Korea is a good opportunity right now. Japan is also a pretty good opportunity, especially if you're investing in the robotics sector in Japan. The rest of Southeast Asia is kind of a mixed bag. And India has good fundamentals, but the valuation is fairly reflecting them. So I'm fairly neutral. That's kind of my survey of what's going. And Canada and Australia, I'm a little bit bearish. But that's kind of my survey of what's going on with country by country basis.
Now, how about more into the geopolitical scene? Because you hear a lot of talk about that we are already in kind of a WW3 presently, and that some pundits have said that things are supposed to tick up here this month and going into next year. What are your thoughts on that?
I'm not worried about that at all. In the era of nuclear weapons, World War III is not really a realistic possibility. And what my take on that has generally is geopolitics works for trading specific assets, currencies, or commodities, particularly emerging markets. So if you want to bet on, like, for example, like a geopolitical conflict in a certain region of the world, the neighboring countries, you could trade their currency. Or like if there's one commodity that exported primarily from one region of the world, if you think there's going to be a geopolitical disruption in that part of the world, you can make money buying that commodity. Like the wheat trade going into the Ukraine invasion is a great example of this, or oil prices moving up. Like if there was really a risk of major war in the Middle East, oil wouldn't be trading at $60 a barrel like it is as we're recording this. Look what the market is telling you. The market is telling you no, that this is not a big deal. I think we're going to see an increased likelihood of extended peace, particularly on the Ukraine side. And that is a major bullish catalyst for investing in the European Union.
How about domestically in the States? What's your thought?
I think we're at risk of recession right now in the US for a number of reasons. The main one I've talked about several times on my channel is the idea of the cost of living trajectory and wages not catching up. You're starting to see this with credit card balances have been surging the last year and a half. Delinquencies on things like auto have gone up. You're seeing increased inventory in real estate, even though they have these super good mortgages, but people are still putting their houses on the market. So you have the first time in American history where college grads' unemployment rate is higher than those who didn't go to college. If you told me that 5 years ago, I'd be like, what? That doesn't make any economic sense. But with the advent of AI cutting out a lot of entry-level jobs, it is starting to make sense. Certain companies like Kava, Chipotle, and McDonald's, and a few of these other fast food companies have missed on earnings or have been struggling to get people through the doors. And I think that's a leading indicator possibly for like a slowdown going in the second half of the year if we already don't, if it's not already not in it right now.
How about your take as it relates to where we are as a society, other elements in terms of fourth turning kind of stuff, and how that dovetails into the financial markets and politics for that matter?
We're in the fourth turning. The fourth turning started in 2008, or even some people would argue as early as 9/11. But I think more realistically, the start of the fourth turning was the 2008 financial crisis. And a lot of the things that would have happened in the Great Depression got papered over due to money printing and quantitative easing. So instead of having a bunch of people unemployed, we're seeing people's living standards go down through diluted wages. Especially if you're a millennial, you probably get this. We've had to take it in the shin for the last 15 years or more. Actually, it's like 17 years since '08, I think, if I'm doing my math right. And I think we're actually closer to the end of the fourth turning and the start of the new first turning than the beginning. We're going through the resolution right now, like political populism, all the stuff going on geopolitically, of like all the tariffs, and it's kind of maybe the start of the negotiation of the new economic and social order, and then the advent of all these new technologies. I just think that we are kind of going through it now. And maybe historians 20 years from now will say people were in World War III or in the Great Conflict without even realizing it through things such as cyber warfare or other more covert operations. Like in the age of nuclear weapons, you can't just have total war. I think that's what a lot of these people are waiting for, some giant flashpoint crisis to be the end of all this. I think we could have a garden variety recession. And I think the last step is the waterfall in housing. Like that's kind of going to mark the end of this, because Once that structural headwind in society is kind of gone and you see the generational turnover post boomer, that's when the new first turning is happening.
What do you see that first turning looking like?
I think that you're going to start seeing, if you're familiar with the book The Fourth Turning, if you haven't brought on Neil Howell, you should try to bring him on your show. That's another suggested guest. But like usually first turning is a restore to order. And you're starting to see this with certain social trends, like a record level of millennial men and Gen Z converting to Roman Catholicism, which is like the most pro order ideology out there. You are seeing just a lot of people trying to, particularly in our generation, trying to build new social institutions. They're creating like the old Lions clubs or bowling leagues back in the day. Like, for example, you started your social club in Orange County when we met is a good example of that. Our generation is trying to rebuild a lot of the communities that the boomers and the Gen Xers discarded in the name of individual freedom. I think you're going to see just also a general political climate that is probably a little bit more authoritarian. And even if it's still a democratic society, there are more hard social norms and less tolerance for slack in society, for lack of a better term. Like I've talked about this idea of like in my videos about like how Gen Z is quite materialistic and about social ties and people using apps instead of human interaction. I think you might see a reversal in a lot of that as housing prices come down. You'll see a lot of people who originally thought, maybe I didn't want to have family or kids, are going to switch once it becomes financially viable again. Japan is the first one this happened to, and it's happening right now in Europe, where you have a baby boom generation either gets old or passes away. They own all the assets. And so as a result, they have to sell either to cover their retirement or to pay their estate taxes or both. Or their kids have to sell to pay their debts or get rid of their parents' assets they don't want. Like, say, for example, you're a young person who lived in LA. You couldn't afford to live in LA, so you moved to Denver or to Nashville. You bought your house, you have your family out there, and you're like, your parents die, and now you have this $2 million house in LA. You're probably going to sell it because you've already established your life elsewhere. Why would you uproot and come back? You have your friends and your kids' friends and all your community in the new town. And so you're going to see just like an unwind. But I view like the boomer generation impact on the economy kind of like when a snake eats a giant deer and has to move through the stomach. And we're kind of moving through the end. Like we saw in Japan in the 90s, the Imperial Palace Tokyo is worth more than the entire real estate market in the state of California in 1989. And we're going through this example, like other luxury areas in the world, like Lugano or Zurich, Switzerland, or some of these high end places. They're anywhere from 75% to 50% or even less of the valuations of Newport Beach, California, which are similar levels of upscale luxury crowd, yet one is trading double the other just because it happens to be in the United States. I think it's a combination of currency factors, but also the fact that Europe is demographically going through this before us because the boomers in Europe didn't have kids, whereas the boomers in America had larger families. And so that's why it's taking a little bit longer. But if you look at the real estate market, which is why I think it's going to correct, over 2/3 of the real estate market is owned by people 55 and over. And that's all going to have to turn over. And you have this enrollment cliff. The university system is going to have to be completely revamped because you have a record level of young people in terms of lows going to college, not because all of a sudden everybody's decided, oh, I don't want to go to college anymore. They were just 18 years ago, less of them were born. The millennials were the peak college generations. Every year since the class of 2013 has been a decline in enrollment. And now with Trump putting a student loan cap as part of the OBBA, there's going to be less money per person and less people going to college. So the whole education system is going to be revamped. I think AI is going to change the relationships with work. And I think the boomers passing away is going to open up a massive amount of housing supply. And I think it's just going to be kind of a whimper more than a bang.
What are some other things that are not receiving enough attention?
I think humanoid robots are not receiving enough attention. The idea, like you hear in the mainstream media, particularly in conservative circles, is that you should just work in the trades because you'll always need a plumber, electrician, or construction worker, even though white collar jobs in New York and San Francisco are going to be replaced by ChatGPT. Not so fast, my friend, on this. I think that the physical robot development is being relatively undershadowed and not looked upon because we don't have something like ChatGPT that's a product that everybody accesses yet. Once somebody creates Rosie, whether it's Dyson, whether it's Google, whether it's Tesla, whether it's a few of these other venture-backed startups in this space, create something on the shelf that you can buy that can fold your clothes and do your dishes or do construction work. Then people are going to realize, hey, wait, something big is happening here. And I think that's heavily underlooked. I also think the other thing that is underlooked is healthcare. A lot of the healthcare industry is driven by a lot more boomers going into their late years. The first boomers turned 78, which is life expectancy, January 1, 2024. And as that generation slowly dies, you're not going to see growth in healthcare like you. And with people like RFK and all voting elected in general saying we don't want to pay drug prices the same amount, like we want to pay drug prices the same amount as Europe, not get ripped off to finance the innovation of everybody else. The healthcare industry is kind of struggling more than people anticipated. And then the last one is senior housing. I think this is kind of the peak for senior housing in the United States because with these robots, if they come like I anticipate them to, and watch my video, people will be able to live independently until they're 100. You won't need to hire a nurse and you won't need to live in a retirement home because the robot will be able to call for an emergency. They'll be able to help you with your needs. By the time my parents need help with mobility, they'll be able to buy a robot. Their kids could come and check in once in a while and make sure everything is working. And visit them because you should support your family. People won't have to leave their homes. And you'll have people who are stay-at-home parents right now could probably focus more on education and less on chores. And there's a lot of socioeconomic, cultural things that we don't know what the implications are. And then with AI from a class and cultural perspective, people understand the economic side and potential job disruption, but nobody really talks about like what does it mean for how we relate to each other as a society and whether democracy is viable in a world where you have more people who are not in the labor force versus are in the labor force. So those are things that are on my mind.
I think that's an interesting point that you bring up, Nick, as it relates to the labor force. It seems that younger women are surpassing young men by and large.
Only in a few metro areas. Yeah, you see, there's a trend though.
Do you see that they're becoming more of a delta in that, or where do you see things as it relates to this upcoming generation?
If there was no AI, I would say that a lot of that is due to a lot of the social dynamics. I've talked about this in my class and marriage videos. A lot of men don't want to get married unless they feel like they can support a family by themselves. And a lot of women don't want to marry somebody who is below them socioeconomically. So that kind of creates this dilemma as you have relative wage parity. It makes it less attractive for people to get married and have families to a certain degree. But I think none of this analysis actually matters because AI is going to change the whole dynamic. Like, I don't really think that question really matters because the premises of it is invalid with AI disrupting a lot of it.
Anything else you'd like to dispense to the audience?
Generally, I think that there's too much pessimism among millennials and Gen Zs. I think that I've noticed this is probably a trend I probably should, a lot of people are giving up at too young of an age. I see a lot of people on YouTube, particularly in their late 20s, early 30s, saying the housing market is too unaffordable. The dating market is rigged against me, whether I'm a man or a woman. There's a red pill for both genders now. My job is going to be replaced by AI or a robot. College is too expensive and doesn't generate any value. We're going to have World War III. The political culture is just causing all this chaos. It's going to lead to civil unrest. There are too many immigrants. There are not enough immigrants. There's too many people, overpopulation, underpopulation, climate change. Whatever it is that a lot of these are just kind of excuses for people to quit, to be quite honest with you. And I'm doing some research on this that basically the number of people in America who truly make it, which is basically people with like 1.5 million or more net worth, is about the same percentage of the population who doesn't quit on their life dreams by the time they're 40. And I don't think that's entirely a coincidence. I think we need to have more resilience. And I mean, like there are certain places, the Silicon Valley entrepreneur community who is good at this kind of thing. But the rest of the country, particularly the Gen Z crowd, is quitting too early. I think their switch to work-life balance is a little premature. But I'm not saying you should just grind like Gary Vee for no purpose. But people have a purpose to do something on this planet, and just to be like to kick back and be like, I'm just gonna just do the bare minimum and chill until I die is just we're absorbing a lot of that culture that has been in Europe for decades. I think America can turn around for that because I think two world wars have an effect of jading a population that, since we won the war with little damage, didn't impact us to the same degree as East Asia and Europe. But that's the thing I'm really seeing is that I think is a kind of the economic and cultural issue that is also really underlooked is that I think two people are giving up generally too quickly.